SpaceX taking a very big step towards what's almost certain to be the biggest IPO ever. And I want to get straight over to Leslie Picker. She's got the perspective. She's been going through all of it. What do you see as the biggest highlights, Leslie?
Hey, Andrew, good morning. Yeah, after being filed confidentially, SpaceX flipped its S1 public yesterday, giving a long-awaited peek into the 24-year-old company's financials. SpaceX generated $18.7 billion in revenue last year. That was up 33% from the prior year. In the 3 months through March, SpaceX generated $4.7 billion in revenue and a net loss of $4.3 billion, nearly the same size. The company also showed long-term debt of $29 billion. Still, SpaceX is seeking a valuation around $1.5 trillion, and that's on some of the conservative side, based on some of the sources I've spoken with. That implies a multiple of 80 times last year's revenue. But there appears to be more growth coming down the pike. SpaceX said that Anthropic will pay $1.25 billion per month through May of 2029 as part of a compute deal that was announced earlier this month, and the capacity will ramp over the next few months at a reduced fee, and this agreement can be terminated by either side with about 90 days notice. Well, most of SpaceX's revenue currently comes from Starlink, satellite business. It says in the prospectus that it has, quote, the largest actionable total addressable market, or TAM, in human history, which it quantifies at $28.5 trillion. And the biggest component to that TAM, the company says, is from AI, which it estimates at $26.5 trillion, and that would span infrastructure, consumer subscriptions, digital advertising, and enterprise applications. So this IPO, like many of the smaller listings that came before it, will hinge on the validity, or at least the investors' perceived validity, of these big dreams. Andrew.
So there's a whole bunch of other things in there, to me, that were fascinating beyond just the profits and losses, or in this case, still the losses, but just what the revenue trajectory looks like. The idea of retail investors getting access early is fascinating, and I think it's a big experiment. I'm curious what you're hearing on that front. There's the governance question. This is a company that is genuinely going to be controlled by Elon Musk. So much so that technically the company doesn't even need to have independent directors, and what you think that ultimately means. What are you hearing on those fronts?
In terms of retail, I was told that it could be up to 30% of allocations could be retail, and they list a variety of brokerages that they'll be doing that through. Morgan Stanley is directing a lot of this program. Of course, they own E-Trade as well, so you can expect that to be a key component. I had also heard that retail across the pond in maybe the UK and Canada and Japan would be a key component of this as well, kind of garnering retail support, not just here in the U.S., but also abroad. In terms of the governance, very unique here, not unlike things we've seen at other Elon Musk companies. I believe he'll have about 85% of the control after this company goes public. We should get more details about governance, too, as the filing gets amended over the course of the next few weeks. That's something that has been out in the press for a while, just the unique governance structure and the ability to remove Musk. It's something that some of the pension funds have really balked at. They're not buyers of IPOs, but they're buyers of indexes. And if this company is included in the index, they could be essentially forced owners of SpaceX. And so they said that the governance structure that had been out there in reports is something they were not fond of. Whether it's enough to really, prevent this company from filling its order book remains to be seen, but probably unlikely, just given the nature that this is SpaceX, this is Musk, and people have really gotten used to that.
Leslie, let me ask you this about the retail piece of it. There's part of me that loves it in that, you get the idea of democratizing an IPO and people getting access at least earlier than some of the institutions might otherwise, and allocating it that way can be seen as a positive. At the same time, I think there's been a question about whether you think retail investors ultimately stay in. Maybe, do they have diamond hands, if you will? And the reason I ask is Bill Ackman's IPO recently, he actually approached it by trying to offer more shares early on to retail investors, and they ultimately flipped it very quickly, and it wasn't positive. And so I just wonder, what you're hearing on that front.
Yeah, no, you're spot on there. And the old school playbook for IPOs, especially big IPOs, was to really lock up a concentrated book of allocations with long-term holders that the bankers can trust and that they know won't flip it. Usually hedge funds were deprioritized. Retail was absolutely deprioritized in big listings like this. So 30% would absolutely be much larger than is typical for a deal of this size. And based on what I've heard, there is, of course, the risk of them flipping. On the flip side, I think there's this idea that retail owns a lot of Tesla, and therefore, it would make sense to extend that to SpaceX. But to your point, with these, we don't know what the float size will be quite yet. But based on the numbers that I've heard, somewhere between 50 to 75 billion, and then if the, valuation is, say, upwards of $1.5 trillion, you're looking at a really, really small float. And when you have a supply-demand dynamic like that, you do risk additional volatility, especially if you don't have as great of a sense of the trustworthiness of the people who bought in at the IPO.